Switzerland faces record-high U.S. tariffs, economic crisis, and negotiations. Imagine waking up to the news that your country has been slapped with the highest U.S. tariffs in Europe, a whopping 39%. A figure that's not only the highest on the continent, but also the fourth highest globally, surpassed only by Syria, Laos, and Myanmar. This is the shocking reality that Switzerland is facing, and it's sending shockwaves throughout the nation. Just a few weeks ago, the Swiss government was beaming with confidence, having facilitated a meeting between the U.S. and China in Geneva, aimed at preventing a trade war between the two economic superpowers. Switzerland's president, Karin Keller-Sutter, had even hinted at a potential trade deal with the U.S., with a tempting tariff offer of around 10%. But those illusions have been shattered, and the country is now grappling with the consequences of a punitive 39% tariff. But here's where it gets interesting. Some Swiss politicians are already arguing that the country's negotiating tactics were not up to scratch, while others claim that they were too tough or too obsequious. The reality, however, may be more straightforward. Trump was keen to make big deals, and Switzerland just isn't that big. It's not even clear how many discussions the Swiss trade negotiators were able to have with their U.S. counterparts. The sticking point, according to the Swiss government, is the trade deficit it has with the U.S. Trump sees trade deficits, when a country sells more to the U.S. than it buys, as inherently a problem for the U.S., although this is a view not widely shared by economists. He believes tariffs can help protect the U.S. manufacturing sector, which for decades has lost jobs to companies overseas. The Swiss trade deficit with the U.S. was $47.4 billion in 2024, though if service industries are included, which Trump conveniently ignored, the deficit shrinks to $22 billion. Switzerland sells more to the U.S. than it buys, primarily in pharmaceuticals, gold jewelry, watches, and machine tools. To try to compensate for that, the Swiss government reduced its own tariffs on U.S. industrial goods to zero. And multiple Swiss companies, such as Nestlé and Novartis, promised multi-billion-dollar investments in U.S. plants. Switzerland is already the world's sixth largest investor in the U.S., creating, according to the Swiss, 400,000 U.S. jobs. But balancing the deficit looks impossible. The population of Switzerland is just 9 million, and, bluntly, many of them don't want to buy U.S. products. The gas-guzzling cars are too big for Alpine roads, and U.S. cheese and chocolate, well, let's just say they're not really to Swiss taste. Jan Atteslander, head of foreign trade at Economie Suisse, which represents businesses, told Swiss Broadcasting, "We need reliable relations with the United States." This could be a signal of frustration that one of Switzerland's most important export markets has adopted an on-off trade policy, stripping Swiss business of the certainty it needs. So, what can Switzerland do now? There is a small window of opportunity until August 7th, when the tariffs are due to come into force. Until then, the Swiss government will feverishly try to negotiate. Swiss businesses are warning of thousands of job losses if the 39% tariff can't be reduced. But it's hard to see what the wiggle room is. With the investment promises and the zero tariffs, Switzerland had already offered everything it could. The only tactic now would be punitive. Withdraw the investment offer, introduce reciprocal tariffs. And the nuclear option. Cancel Switzerland's order for U.S. F-35 fighter planes. Across Switzerland, there is confusion and anger. Friday is Swiss National Day, the equivalent of July 4th. After giving her traditional speech, Swiss President Karin Keller-Sutter was asked about the U.S. tariffs. She told reporters the talks with the U.S. went well, but that for Donald Trump, the trade deficit was the obstacle. The inference was that the U.S. president was the problem, instead of the usual patriotic celebrations. Many Swiss feel they are being punished for having one of the world's most competitive and innovative countries. Others say the country has survived economic shocks before and will be able to use that innovation to survive this one. And this is the part that most people miss. The impact of these tariffs will be felt far beyond Switzerland's borders. It's a wake-up call for other countries to reevaluate their trade relationships with the U.S. and to consider the potential consequences of a trade war. But here's the question. Is this the start of a global trade war or just a minor skirmish? We want to hear from you. Do you think the U.S. tariffs on Switzerland are justified, or are they a misguided attempt to protect American interests? Share your thoughts in the comments below. Impact of Trump's 39% tariff on Swiss watches. What you need to know. A 39% tariff on Swiss imports could significantly increase luxury watch prices in the U.S., sparking debate among collectors and industry experts. This policy, set to take effect on August 7th, would affect brands like Rolex, https://www.is-easier-than-you-think 2024-3, and Cartier. Buying a Cartier is easier than you think 2025-1, which are major players in the global watch market. Switzerland, a hub for watchmakers, has already raised prices in the U.S. this year, likely due to tariffs, according to Morgan Stanley analysts. These price hikes will primarily impact second-hand markets, where demand is shifting away from new models to pre-owned alternatives. Collectors may opt for pawn shops over boutiques this year, as highlighted by Josh Ganjay, CEO of European Watch Company. However, the impact could be immediate, with higher prices on Swiss-made goods shipped to the U.S., or less availability for American consumers. While the Swiss government might still negotiate, the tariff is currently scheduled to apply starting in August. For those interested, the rise of pre-owned luxury watches, especially Rolexes and other high-end models, could become more affordable, as noted by Ganjay. This shift underscores the growing importance of second-hand markets in today's competitive watch landscape. The tariff represents a significant change in pricing dynamics, potentially leading to a divergence between the new and pre-owned markets.